The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time at 877-927-6648. Love to hear from you. A couple of things we need to look at right now. We're looking at the Dow, up about 16 points at 20,954. S&P is up $1 at 23.99. Let me just move this away for 1 second. We've got the comp index at 61.44, up 5. The VIX is down at the 10.58 level, down under 11. This is going to be very interesting. The E-mini is down a quarter, 1 quarter at 23.97. What you can see here is this V-shaped pattern in the daily chart. This is the daily chart on the left. And that shows you that the MACD is really struggling to cross positive. It's attempting to, but it hasn't yet done it. Stochastic has rallied quite nicely, but it's still at 73%. The on-balance volume had a nice V-shaped recovery. It is higher than it was when the S&P E-mini was at 2404.50 back on the 16th of May. In a sense, that's a good sign. In another sense, it's a saying, you know what, you've got one indicator flying to the upside and nothing else is really following. So be careful. Not only that, within the context of the markets right now, in the 120-minute chart, if I can just pick it up right there, in the 120-minute chart, there was a test of the 23.99.50 level. It went to this D right here. And what's the objective in the Chapman wave is to get you to a D. I'm actually going to move this 5 over right here. I would not be surprised if we, as we speak right now, we're starting to form some kind of a reversal formation that says that the upside is now extremely limited. The downside will only become open when the E-mini breaks 23.92 support, and that could happen maybe by tomorrow as I'm looking at it. Meantime, back at the ranch, 2404s, that's going to be the big resistance that it needs to break. As it stands, the MACD in the 120-minute chart is pulling back, stochastic is pulling back, on-balance volume is pulling back. I suspect we're real close. Okay, so now let's go on. We want to look at the QQQ. Why? Because the Qs have led the way up. The semiconductors and the QQQ NDX 100 has led the market to the upside, almost in a solo run, as if the generals were running away and the soldiers were sitting there saying, hey, what's happening with these people? So when I look at this in terms of, so that's an F. The QQQ went to a peak F right there on the 16th, turns down sharply from the 139s, goes down to 135.87 at 11:30 on the 18th in the 120-minute chart. Starts a brand new move to the upside, a V-shaped recovery. Not as powerful on the way up as it was on the way down, but still pretty powerful because why? It's gone to a leg E, and it's almost touching the 139.64 high that was made on the 16th of May. It's like a few cents away at 139.28 right now. The high today so far is 139.58. So I'm watching this very closely because my eye says, based on chart formations and other techniques, that there should be an arching over right here. Not a V-shape, inverted V, but an arch pattern. As the QQQ NDX 100 trading vehicle, Power Trust Series, takes out the 138.91 9-period exponential moving average in the 120-minute chart, starts to trade into the low to mid to low 138s, and that's really the scenario that I'm looking at over the coming few days, going into early next week. Technically, the weekly chart is still very powerful. on-balance volume suggesting we're a little bit toppy right here. The long-legged doji candle from last week suggests that a close above 139.64 on a weekly basis would be really positive. A close below the low that was made last week of 135.87 at any point in the next 2 weeks would become at least short intermediate term negative. All right, I think we covered the cues. Let's go to the IWM. The IWM has kind of been the laggard today. It's actually the leader. It's up 0.31. Dow's only up 0.08, and the S&P is only up 0.04%. So the IWM at 137.82, acting very nicely here, but it's just about, it's within fractions and within an hour of giving it a real test in the 120-minute chart, because it's in leg F. Technicals are good, but we'll have to see at the close today if it gets repelled by this downtrend line in the daily chart from the high that was made, the all-time high at 141.82 on the 26th of April, and you've made lower lows and lower highs ever since then. You've gone to a trough C. This is a gray A, and I wouldn't be surprised if it gets repelled right from this area. We're going to be watching this one real closely. Let's go on to the TLT, which is the T-bonds. This is the 20-year T-bond fund. It's up 20 cents at 122.74, holding the 9-period exponential moving average as support on the daily. The technicals are not great. The weekly chart, actually, technicals are steady to improving, but it really doesn't mean anything until the TLT takes out the 120, starts to trade in the 125s. As soon as it does that, you're in a whole new ball game, because yields will go even lower and money will start to migrate from the equity situation or positions to the so-called safety of bonds. That's what we're looking at. Then I think that the market starts to pull back deeper. Now, I contend that until there is bad news, like a dark cloud over the market, filtering into every pore, every news agency, there won't be a sustained down move. You'll continue to see this choppy sideways action in a trading band in the Dow. It's between 21,000 and 20,500 at this particular point. That's really a sideways, we call it a rectangle formation. The VIX index at 10.55 is suggesting that this uppercase A pattern, the Eiffel Tower, straight up, straight down, is really close to finding some kind of support. I would not be surprised if in the next 2 days we start to see the volatility index trading in the 1150s or higher. It's at 1056, a point higher. That'll be very important in terms of looking for some kind of a consolidation to occur, which is what I'm expecting. All right, that's that. We wanted to look quickly at crude oil. Crude oil was in leg D. It's still leg D. 51.30 was leg D mean. In the Chapman methodology, we look for certain peaks in consecutive order. I wonder if I can find it. Yep, there it is. This is a real easy drawing right there. This shows you the patterns that have evolved over the years, and I've decided over 20 or 30 years that a trough that forms a low, and you can identify each successively higher peak, making the fourth peak, peak D, alphabetically in sequence. That's where other things can happen. And we're going to see what happens in a number of areas. Yeah, crude oil getting to the 200-period moving average in leg D. We'll see if we'll back to it.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and we're looking at crude oil. Now, what I'm looking at is this almost a straight line move. Peak A, peak B, peak D. No, sorry, leg D. And the stochastic and the MACD are very strong. The degree of angle at 95% in crude oil on the stochastic daily, the degree of pullback, it'll have to be a pullback into the 49s to really take the stochastic from 95% to under 80%, because I consider over 80% bullish. So I'm not sure it's going to do that. So I'm thinking here, when you're looking at, you see on the right here in this little rectangle, this little square actually, this is the 120-minute chart, and you see the way that it's arching over. I love to see that. It's a miracle when you think about it. How does the chart know that momentum is slowing down and each higher high becomes only slightly higher until it makes that full arch formation? This is like an inverted V if it's going to pull back. There's a difference. There's an implication of differences. Well, I like to think of the market moving only in 3 directions, either straight up or straight down, or there's an arch formation, which is part A and part B, because it could be an arch that is either an inverted V or the arch, like a semicircle or an inverted V, or you've got the V-shaped pattern or the cup formation. So it's either straight up, straight down, that's 1. It's either an arch or an inverted V, that's 2. Or it's a cup or an inverted V or a V-shaped pattern, that's 3. Each one has a part A, part B. So those 3 patterns get repeated over and over. You can see, look at this, in crude oil weekly, this becomes almost like an arch formation, right? But this one becomes like an inverted V. You go up for 2 bars, and you come down for 2 bars, 3 bars actually, to break that left side low. And we're trying to do it again. So, and here in the weekly chart, you see these beautiful arch formations that I keep saying the lowercase h becomes a lowercase m. And then there has to be something really spectacular to be able to break out and then close above the arches And because if you don't, to do that without taking out the left side low bar would be really impressive. But at this point, the low that was made in February of 2016 crude oil at 38.76, that's going to be the issue. So if we don't get there and you break to the upside, that becomes very bullish. I just don't see that happening with crude oil at this particular point. I want to look at high-grade copper. High-grade copper trading at 2.5745. Made a peak D. Remember how important the peak Ds are? I was making a big deal about that. Big D for big deal. And there's that D. And look at that sharp pullback that copper just had. And all within this lower range of the arch formation in the weekly. So crude oil would tell me something very positive. It was able to get to the 2.65 area within 3 or 4 days. And it'll tell me something very negative if it goes under 2.52. And it's at 2.57 right now. If I look at the dollar, the dollar at this particular point is just trying its best to form some kind of a base. Nothing impressive. It's just kind of stalled from that sharp move down daily. And now it's trying to rally. Had a good day yesterday. Candles trying to be elevated to push above 97.34 where it's at right now. Needs to get to 97.80, above the 97.75 9-period moving average in the daily. It's going to be tough to do. However, if I'm looking at gold, and gold right now is trading at, is down 2 at 12.52. Still holding within a nice containment area, but I'm looking at some of those gold stocks and silver stocks. They've been hit pretty badly. Now, what's really impressive is that there's a relationship that I happen to like very much, and that is when the gold stocks lead gold, it leads to some really good gains when gold finally catches up. When gold leads, it doesn't always mean that the gold stocks and silver stocks are going to move higher. And that's kind of what we're looking at. And in this particular instance, what I'm suggesting to you is that the sharpness of the pullback in peak C in the weekly chart from the high that was made just under 1,300 down to the 1214 area, now at 1252. This is a nice rebound. It's really a congestion area, and what we're looking at is that gold at this particular point is kind of trading between perhaps a high of 1267 and a low of 1242. That's the range. Breaks either one of those levels. That's very impressive. So that's what I'm looking at, just a chop trading band. So with that said, now let's do some things that I always get asked questions about. The XLF. The XLF is pulling back. It's at 23.54. I don't think it's ready yet. I think it needs a little more time. It needs to retest the high to mid 22s as a 23.54. That's my thinking. But in the interim of my thinking here, if there is a sudden move into the 23.80s, I'm going to have to say, hey, that is impressive. Right now, I just think we chop in a sideways trading band. And if you want, I usually get asked about Goldman Sachs. Nice rebound at 221, up $1.30. There's the H pattern. So far, I have to consider that it's a successful test, 213.18, the week of the 21st of April, 213.12, took it out. That's a leg C to the downside. It has to be a very impressive move to the up to trigger a buy signal in the weekly chart. Right now, the daily is saying, good try. If it gets from 221 into the 224s, I have to consider that at least it's in a buy signal, not necessarily a buy mode, but a buy signal, which says it could test that trend line resistance right here, and that trend line resistance, which has been a repellent line for so long, is at 225. So we watch that closely. Next question I often get asked is USO. This is in leg D. Same as this is corresponding beautifully to the price movement in crude oil. Sometimes they don't work 100% together. Right now they really are, because this is the trading vehicle for oil, crude oil. So it's in leg D, bumping into resistance here. All I can say is that impress me. Come on, USA, you impress me. I'll be impressed if it takes out $11 in the next 3 days, and by Wednesday, a week, it's testing the 1126 high of the 12th of April. I don't think it's going to do it. I think it's going to start to pull back a little bit. And that says the dollar could rally a little bit. We're going to have to watch gold. And right now, I just did gold. Oh, we've got Roy in Fort Worth. Roy, how are you?
Good, Basil. How are you doing today?
I'm very well, thank you.
So, how's Bitcoin doing with that GBTC? I took your advice last week when it hit peak E, and I took some profit and everything. And you said it would hit 300 by the end of the year. It looks like it might be the end of the year right now.
You know, I looked at this last night, and I'm saying to myself, wait a minute. It pulled back to the 9-period moving average. The MACD was still holding well. Stochastic was terrible, but now is rallying. What is happening with it? What's with the speed? I mean, I'm upset because I actually wanted it every year. I like to have at least one stock that we treat as a highly leveraged trading vehicle. And I thought, wow, this would be terrific. And here it is at $341.70. 3 days ago, it was trading at 231. It's at 342. Roy, can you hold on? We'll talk about this. This is incredible.
Sure.
Okay. We'll be looking at Bitcoin Investment Trust. GBTC is the symbol. It is amazing. Dow's up 26. S&P's up 2. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Everyone, we're back. Dow's up 34, S&P's up almost 3, and we're looking at GBTC. This is Bitcoin Investment Trust. It's only trading at $340, up $46. just a few days ago, it was down at 231. It's almost 50%, over a 50% gain. That is incredible. So, Roy, what I'm going to be suggesting to you, because this is going to be the now, how can I phrase this? I want to put it into context. The I Omega of the 2017s. Anybody remember I Omega? It's this incredible, with cutting edge technology, and had the same kind of thing. I remember it breaking out when it was at 20, soon after the IPO, and it just went straight up. So now most of those issues in 1999, late 99, early 2000, the high techs did the same. So this is in the same category. So I'm going to recommend that you keep your core position. How you trade this now is going to be you didn't add at all, right?
No, I didn't add. I got out about 75% of my original position and took profit, and then I was waiting, and I thought maybe it dipped down to maybe below 180. Then I thought I'd get back in, but it passed me by. So I've got just a small amount still in, and I think I'm going to wait again until it drops and try it one more time.
Let me go through a couple of things here. Number one, money management, etc. I just don't see how you could have done anything else. It was at that particular time. It looked like a peak F at 265 back on the 10th of May. It was a spectacular move. However, talk about percentages. It goes from 265 to 183. That's an 80 point decline. That's what was that? So that's 80 point. That's about 28, almost 30%. Yeah, it's right. That's a huge decline. The speed with which it's come back is telling me that this is in play. So I'm going to suggest that your core position, you might just be holding that for a hope for a very long time.
All right.
What I am going to suggest is that I'm giving it an alternate wave count because the MACD did not cross negative. If it crossed negative, I would have said definitely that's a peak F. Because it did not, I'm going to suggest that you think of it as an F/B, and we're now in a G/C. If it has a spike tomorrow, then it's just going to be too late. But if by later today it pulls back, and you can see this thing at about 296, of course 296 is 100 points higher than where you had it just the other day. I mean, what can you do? It's in play. Once something's in play, it just keeps going until there's either a bad news event or it just gets so stretched that the elasticity of the move to the upside says it better come back. It doesn't have to come back to regress to the mean. It definitely has to come back for a rest. It could be time. So I'm just going to suggest you keep your eye on it. I'd be looking at it if it can just dip underneath the high of yesterday, which was 295, maybe 286 area. I would put back just a little bit, and I treat that as a trade. And if you get it, you might have to give it a little bit of room because it's kind of wild right now as leeway. But what I would say is my target now is the 420s. And I'm just visualizing. There's no way I could measure it. I could use a Fibonacci extension. It doesn't matter. The thing is that I think it wants to go to the 390s. The moment it breaks 390s, it'll spike into the 400s. And then I think it'll give back more of price and time. So as a trade, that'll be fantastic. You get into somewhere 286. Hold it if you can and ride it right through to the 360s, 370s. And if that same move barely gives back anything but keeps going, because I don't know anything about whether you can have this as a short. I don't know if you can even short it. I have no idea. But I do know that once it's in play, it's going to become, I'm going to look at the volume. I bet the volume is starting to really increase, and that'll be amazing if when it's gone to the 300s, volume, there it is. So volume is 110,000. 141 the day before yesterday, 123. So volume is increasing with the rally. And that says to me that if people are paying up at a higher price, it is in play. not, I mean, I don't even know how you test it for fundamentals or anything like that. This is just a sexy stock, and you got to treat it like that. So I'm just saying to you, too late to jump in now. But if you want to trade with the potential that maybe this is not a G but a C, if it pulls back, it has to be very quick. It has to go there and then suddenly pull back to about 286 and then just stop dead. And then you want to just find it, if it gives any sense of a platform for about an hour and a half, then you can nibble on it or just have another position, treat it as a trade. And the moment it goes to that leg D, just raise your stop. And if you're watching it like I think you do closely, my target would be see what happens if it can get over 370s, because then it should be a real quick run to the 390s, 420s. Then I think it's going to take more of a timeout. Monthly chart is unbelievable. This one leg in May has gone from 143 to the high right now of 346. That is incredible. Yeah. But you're watching it, and I'm just going to suggest to you, I know it might be hard, I don't think it's going to come back to your entry price. I think you've got yourself a core position on something that could be in play for a very long time. And don't be surprised if Bitcoin at some time, now that it's gone to 300s, not this year, but this week, is actually $1,000 stock sometime in 2017. It's just got that look.
Right. Well, I was thinking maybe that it could come back to maybe something like, it stalled a little bit around the 210 area. So I was thinking if it falls anytime in the next few days or so, that's where it might head back to. And then,
you might be right. It might, you might be right about that because of the speed, but there's something going on here that has to do with the stuff that you can't measure because it has to do with emotion. I don't know what it is that you can talk about here that is to do with fundamentals, because when something as unknown as Bitcoin moves like this, there are forces behind it that most lay people wouldn't be able. I certainly couldn't figure it out. I'm just saying to you, the momentum is extreme, and that momentum should continue until it does some crazy, until one day it has a move intraday of maybe 150 to 220 points in one day, and then it closes at the low of the day. That would say, whoops, now you got to be careful.
Sure. Dave White thought it was like trading Beanie Babies, and Andy Heck said it was tulips.
This is not, I'm not going to put this into the tulips category yet, but it will be the tulips category. When you read the story of tulips and they get to the black tulip, and then the final tulip was sold, a working farm was sold. Someone who was the caretaker of some children sold the farm for them, and they sold it for the price of a black tulip. The whole farm, everything there. We haven't got to that stage yet. This is still green. It's not the black tulip. Thank you, Roy. Congratulations on your trade anyway.
Thanks,
you soon. Bye. We'll be back, folks. Dow's up 29.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Just as we're speaking, GBTC went up another, whatever it is. It's up 62.70 at 356.75. Wow. All right. So, Mike says, my theory is that price started moving in past months by Chinese needing a method to get money out of China and converting from Bitcoin to US dollars, then buying real estate in the Western US. Hyperbolic move equals tulip mania. Let me just clarify. As a public vehicle, Bitcoin has only been around since last year, June. So it hasn't yet got the bubble. People, you could speak to 1,000 people. No, you could speak to 10,000 people, and I wouldn't be surprised if maybe one has heard of Bitcoin. No, it's when out of 10,000, 990 people have heard of Bitcoin. Then you get your bubble. This is just the start of the bubble. This is, now it's at 358, up 64. This is, let me show you the 10-minute chart. Look, Bitcoin, GBTC. Look at that. Just from this morning, just from yesterday, today's 24th, right? So from yesterday, from the 22nd, from the 23rd. Gaps up, goes to peak A, B, C, D right there. And now it's at A, B, C, it's in D. And look at the expansion. Yeah, on a short-term basis, it's going to get overbought. I'm telling you now that I don't think it's now it's a 358. I don't think it's a bubble yet. I think it's in the category, right? Absolutely. I spoke about this some time ago when I first heard about it. I said, my thinking is that at some point it'll become sort of subversive. It'll become the underground economy or whatever you want to think of it as. And then it becomes formalized. It becomes more international and then national. And then the focus becomes the market. And that's where it is. I think it's getting much, much higher. But on a very short-term basis, sure, it's getting somewhat overbought. So now let's do this. I needed to look at a couple of things. So yeah, Mike, I don't disagree. I'm just talking timing. That's all. What's most important is timing, of course. I wanted to show you a couple of things here. Within the context of the markets, the volatility index stuck this morning to a lower low. The low yesterday was 10.42. Today's low is 10.23. The 120-minute chart just went to a leg E to the upside. I believe that's a leg E to the upside. And what's so fascinating is that the short-term trading index, Richard Arm's trend index, is up at 154. And that's telling us a story. But what's really important is if you look at my 5 quadrants right here, you'll see that this leg A has continued up in the S&P and in the Dow. And both of them, well, this one's coming right into the resistance area. Let me show it to you more clearly right here. So leg A up has gone a little higher. And what we're looking at here is that, yeah, this could be the start of a brand new move. I just don't think so. I looked at my Dow Quartet. I looked at a number of aspects, and I think it's become very selective, and that you'll find that the selectivity is essentially saying each one of these candles is starting to make just slightly higher highs. So we might find that it arches over and that by Thursday or Friday, the Dow all of a sudden, instead of being at the 20,000, the 21,000s, it's actually at 20,830, 20,870. We'll see. I mean, this is a work in progress, as they say. But the stochastic and the daily is gone. It's better. The on-balance volume is up. And the MACD hasn't yet crossed positive. If it crosses positive and holds there, I'm just going to have to say, you know what? We could go high, not much higher, but we could go higher. So we've got to be somewhat careful. All right. So what I did want to also show you is that the 120-minute chart went to an E right here. Let me just move this away. This is Chapman 5. I'm still moving it to the right. I haven't used it as a major top yet. And it's gone into leg E. And that's just suggesting to me that, yeah, there's still internal residual strength, but you're starting to see a weakening as it gets closer and closer to the strong resistance area. What will change it is if the Dow starts to trade in the 21,050s, but today or tomorrow. Then I'm going to have to say, you know what? Yeah, we could go even higher than that rectangle. We're going to go test the all-time high. I don't think so. I think this is, by the end of the day, we'll see if there's weakness that creeps in. All right, now, there's a couple of things that we need to look at here. If I can just find where my pointer is, there it is. Within the context of the markets, if you look at the New York Stock Exchange, NYA.X, the New York Stock Exchange, it's had a really good move to the upside. It is really close to the 11,000. Did I not type that in? Let me type it in now. 11,687 high of the week of the 3rd of March. 11,687. 687. 3,317. Put in a little slash right there. Okay, so that all-time high. When you think about it, the speed of this kind of market, 60 points, 67 points should be nothing. 63 points should be nothing. But it has been something because of this rectangle formation. And there's one cup, and we're in the second cup, and that's just saying there's a lot of resistance in the 11,650s. So I'm watching this very closely because it's so close to making a new high. That would get your leg D in the weekly chart. Wow, leg D. Let's look at GE. GE trading now sharply low, down 35 cents at 27.93. What I'd say to subscribers is GE was hinting that the market was vulnerable. We got that 400-point move to the downside. GE was suggesting all of a sudden that there was some internal strength. A few days ago, it had a great move, and then it stalled, and now it's down. And it's saying, you know what? Running out of steam. The Dow is running, the general market, but the Dow in particular is running out of steam. And that says, so why don't you look at some of the other indices? If you look at the IYT, this is the iShares Dow Jones Transportation Average Index Fund, had a very nice single leg to the upside. MACD hasn't crossed positive. Stochastic is good. And it's just within this trading band of the lowercase h formation in the weekly chart. So far, it went below the left side low right here. It went to a leg B to the downside. Actually, it could be a trough B. But the MACD hasn't really turned up, and the stochastic is still very weak. So all I'm saying is that transportation index is acting okay, but I would not be surprised if at 163.02, up 42 cents, it will have to test the 200-period moving average over the coming 2 weeks at 158. A break into the 165.30s would be really impressive. Just 2.5 points up from here, 2.25, that would be very impressive. All right, let's look at the IYR. IYR is the REITs index. This is the Dow Jones US is commercial REITs, and trading at 79.53. Nice action, single leg A up after a test. No, it's A. This is actually B. This is B because it never took out that left side low. This is B, and the weekly chart had this apex. It took out the upside, took out the downside. These apexes, I could do a whole show on apexes. These V-shaped triangle patterns that come to a head, sideways pattern. There are a whole bunch of theories. I think those theories, most of the time, are just hogwash. All that happens is it breaks the resistance and then comes back in, breaks the support and comes back in. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So look at this rectangle formation in the 2-minute chart. You go to the top of the 2400 area, actually 2399, and boom, you come back down. It's not a boom, it's a little boomlet. It comes down to 2397, and then pop, goes back up again, and boom, comes back down. And what I typed in here was rectangular formations can last a lot longer than your patience. And as I'm finishing that up, I get an email saying, what will it take to crack this egg? And this is what I'm thinking. Let me put it this way. I'm going to go to the Dow chart right here, And I'm going to show, no, actually what I prefer to do is to go to this pattern right here. This is what I'm looking at. I spoke about it yesterday, I'll do it again today. This long rectangle formation with a slightly declining channel, meaning the angle of the channel is maybe, 16%, maybe 12%, can last a long time. In fact, this one lasted from the high that was made, that wasn't the high, it was a high, that was made on the 20th of July, Dow 18622. The high at that point was on the 12th of August at 18,606, slightly higher, and that continued with lower lows and lower highs. We're in the same pattern, I believe, right now. So my contention is that I still feel, I can't say great, but I'd say comfortable with our short position. I'm real close to adding to the short position on the downside. I think that the pattern shouldn't change. We've hit the resistance, which is within 3 days. The Dow should be back at the 20,820 to 20,780s. I'm wrong if it just spirals up into the 21,200s. Completely wrong. In fact, I will then pile on to the upside, I'm sure, because then I think you start that acceleration phase. I prefer that acceleration phase not to happen now, but to happen after everyone's just glazed over with this so-called boring market. And that's really what we want. We want to see a pullback. We want to break this trend line of 20,860. When that gets broken and you start to treat that as resistance, then you into this pattern right here. And that's what I think is happening. So it's not an egg that I think the egg is already broken from the 21,163 high that was made all-time high back on the 1st of March. And now what we're doing is we're just watching this. It's not paint drying, because what's happening is internally there's a rollover. Let's go to a stock that I wanted to look at here because it was making new highs. Amazon. Amazon right now is trading at 973.21. It went to a round number 976 this morning. So 976 round number, days young, but I'm putting round number high, at least for the moment. I'm also going to paint it in red because it might be a suggestion that Amazon is just getting a little bit tired, and we'll only know it can go higher, but not much higher. It can go only to maybe 976 point something, not 9, unless there's another round number, 977. But this should be a hint that if Amazon today's Wednesday, by Monday afternoon to Tuesday morning, if Amazon is below 964, preferably below 962, the 9-period moving average, finally Amazon's going to give a suggestion that the last one in the group, look, Facebook, still way under the, not way, but pretty much under the 153.60 high at 149. Goog, I always look at Alphabet and I could go for Goog. Google's at a high. So this is going to be very important because there was a doji candle yesterday. Wow, is that the end? That's the end of the show. Wow, that was quick. I'll be back tomorrow. Stay tuned for great programming coming up. Check out my opening call. I hope you'll find it beneficial and very informative. I'll be back tomorrow. Basil Chapman stepping aside. See you in 23 hours. Have a great rest of the day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.